it's Jennifer Lawhon with Lawhon Home Team, and here with your July real estate market update. Let's get started. All right, we're going to start right off with talking about the economy a little bit and the economic slowdown. The Wall Street Journal says recession fears surge among CEOs. Survey suggests that 3/4 of global CEOs say we are in a recession or will be in the next 12 to 18 months, according to this new survey. A mortgage specialist also says that throughout history, during a recessionary period, interest rates go up at the beginning of the recession, but in order to come out of a recession, interest rates are lowered to stimulate the economy moving forward. Historically, we have seen a repeated uptick in interest rates followed by lowered interest rates. So although we've seen that uptick of interest rates, eventually we should see them go down a little bit to help so that we can help come out of the recession. So let's look at a table here. This is kind of just, like I said, I love data, right? For us to make some projections, it's easier if we can look at what the past has happened, right? History. Here's a table of mortgage rates and recessions. So in 1980, that was where we're starting with a recession. It was about 6 months long, and the mortgage rates were between 16 and 11.8%. Whoa. So then 81 to 82, there was another recession. That lasted a little over a year. And you can see we had those higher mortgage rates, went from 18 to 13. Okay, so if you see in all of these recessions, every single one of these, the interest rates were risen, right, increased, and then they were decreased to help get out of that recession. So that's what we're going to continue, we assume, to see. Again, you never know until things happen, but we can look at data to try to make some sort of projections. All right, so as we said, they all went down in every single one of these recessions. All right, now Fortune says that over the past 5 recessions, mortgage rates have fallen an average of 1.8 percentage points from the peak seen during the recession to the trough. Now, in many cases, they continue to fall after the fact, as it takes some time to turn things around, even when the recession is technically over. Call that the healing period. All right, now, so does a recession necessarily equal a housing crisis? Well, here are those recessions that we saw on that table, and now we're going to look at what happened to the home price changes during the last 6 recessions. You can see only in 2 cases, let me go back. Only in 2 cases did we see where home prices went down. 1991, and that was only just under a 2% decrease. And then, of course, we had that housing crash in 2008, but again, that was from those poor lending practices that were going on at that time. 2020, we saw a 6% increase. So most of the time, it did not necessarily mean that there was going to be a housing crisis. Now let's talk about an inventory update. All right, here's the breakdown. Offers received have gone down. Offers over asking price, down. Sales have gone down. Inventory has actually increased slightly. This is good news. So this is actually good news for the buyers, which means there's fewer bidding wars, right? So this is actually going to be better. Mark Fleming, we use him a lot, says that there has been a pickup in the inventory that we've seen recently, but it's not from a big increase in new listings, but rather a slowdown in the pace of sales. And remember that month supply measures the inventory of sale relative to the pace of sales. Same inventory, fewer sales means more months supply. So here's your month's inventory of homes for sale from January of this year up until May. You can see there's been a slight increase each month. Again, that's good. And here's the new monthly listing counts. So if you look compared to 2021, which is in green, and then 2022, which is in blue, you can see that in April and May, we're starting to surpass last year with our new listings. Existing home sales, these are seasonally adjusted annual rates, but you can see we're starting from, now remember what we talked about in the past market updates, if you've watched those, 2017 to 2019, those were our typical real estate years. 2020 and 2021, not typical, atypical, okay? These are not your typical real estate years. These were during the pandemic, and then you've got this year. Now, looking at that, you can see that this year, our May of 2022, has pretty much matched our previous typical real estate years. Lawrence Yun says that home sales have essentially returned to the levels seen in 2019, prior to the pandemic, after 2 years of gangbuster performance. So like we said, the last couple years have just been very atypical when it comes to real estate. Danielle Hale says that active inventory continued to grow, rising 21% above 1 year ago. In other words, we're starting to add more options, but the market needs even more before home shoppers have a selection that's roughly equivalent to the pre-pandemic housing market. Here's the forecast for inventory. Now, look at the 2022 forecast. This was the original forecast, about 0.3%. The newest updated forecast is a 15%. So we're looking at, as this year keeps going, more inventory. Mark Fleming again said we should start to see less competition, fewer bidding wars, and therefore less upward price pressure. In fact, a simple analysis shows that a 1-month increase in the month supply results in a 3% decline in annualized house price growth. And our preliminary house price index is already showing moderation in house prices in April. So, what's the question? Should I buy a home right now? Here's what some national and local headlines have been saying. The cooling housing market enters into the great deceleration. Home prices decelerate as the market downshifts. And then buying a home at the wrong time can backfire big time. Here's why it may pay to wait. Here's the thing, and this is what I've been talking about in the last few market updates. Decelerating home prices do not mean depreciating home prices. There's a difference, right? Decelerating means slowing down, but still appreciating, right? That's not the same as depreciating. So let's look at the home price forecast for 2022. You've got varying home price forecasts. They're pretty close except for MBA, but if we take the average, we're still looking at an 8.5% increase. So still, again, we're not talking about depreciation, just decelerating. So let's look at the estimated home price performance, December to December. Okay, so we're looking at 2022, roughly they're projecting 9.3%. And then we're looking at decelerating, but still appreciating, but slowing down in the appreciation over the next few years. David Ramsey says that the root issue of what drives house prices almost always is supply and demand. Now, interest rates affect that. When interest rates go up, guess what? Fewer buyers. The demand goes down, thus prices are going to soften or not be as cray-cray as they have been. And that's what we're seeing right now. Let's look at also the U.S. population by generation. This is a map that I haven't shown in my market updates, but we're looking at, this is actually starting with the Generation Alpha. That is 2013 to present. So actually, though, that's our newest generation, all the way down to the silent generation, which was from the 20s to the 40s. Now, if you look at the population right now, our biggest one is the millennial generation, 81 to 96, and these are who we're starting to see now buying their first homes. Some were their second homes, but this is where we're seeing the biggest jump with home buyers right now, especially first-time home buyers. And I'll say these are the peak home buying years, too, by ages. Realtor.com says that experts don't believe the market is in a bubble or a crash is in the cards like during the Great Recession. The nation is still suffering from a housing shortage that has reached crisis proportions at a time when many millennials are reaching the age when they start to consider home ownership. That's likely to keep prices high for now. So now let's go into home sales. Existing home sales. Now, if you look at the dark blue, that is this year, and it's being compared to 2021 and 2020. You can see, again, 2021 was kind of our odd year for real estate. So we had a huge jump in home sales. And if you look at new home sales, they also saw a huge jump, which we've talked about. New home construction has seen tremendous growth over the last couple of years. And then this would be total home sales. So putting it all together. And you can see 2021 has fared better than 2020, but again, if you compare this year to the typical real estate years, we're right along that. look at the pending home sales. So the dotted black line is your historically healthy level of pending home sales. And if you look here at the end of the graph for this year, we're still good. We're still actually above historical healthy levels. So we're doing good with pending home sales. And again, percentage of distressed property sales hasn't changed. If you look down here, this is from 2020. We had about 4%, but this year we're way down, about 1%. Good news. Now, home prices. Sale price of existing homes. Again, the South is still doing very well. We're at the 20.6% mark. I'll say we're still seeing that down here as well. Overall, the average in the U.S. is about 14.8%, so just under 15. Change in home prices. So this is looking over year. You can see in the last few months of this year, they've been increasing every month. And when we get to the Orlando data, we'll kind of talk about that a little bit more locally. So here's your year-over-year change. Current is about 20.2%, which have talked about. We've been seeing a huge appreciation in homes. But the forecast is to eventually go down to 5%, which would be hitting more normalized levels. Housing inventory. Here's your change in housing inventory. Now, if you look at these states, we've actually seen a good amount of increase, which is good. All of this blue is good. You see some strong states over in the West. They've had a greater than 45%. Even in the South, Florida has seen 22.8%, so that is excellent. Average just under 20%. Here's your month's inventory of homes for sale. So you can kind of see this year in the beginning we had a dip, but now in April and May we've seen an increase in inventory. What about buyer demand? So here's the showing activity. It's actually slowing down. This is the year-over-year increase in showing activity, so May of 22. And Michael Lane says that showing activity continues to be at levels lower than we're used to seeing at this time of year, pointing to a market in transition. Following the surge in mortgage rates, it's reasonable to expect that showing activity will continue to ease, especially when compared to last year's historic numbers. What about mortgage rates? We always have to talk about mortgage rates. They've really changed a lot. If you remember, the projections keep changing. But look, this is not looking like a huge amount of change. Roughly staying around 5.07% average. And then hopefully in the third quarter of 2023, we'll start to see a little bit of a dip. So if you look at the interest rates, the blue is what has happened, the actual interest rates. You can see over this year that huge jump in interest rates, especially when we look at back in 2020 when we had that big decrease. And then where are they going? This is the projection. So a little bit down from what we have seen recently. And then here's it looking at a graph. So if you look in the blue, these are the actual rates. And then in the orange would be the projected rates. So yes, a little bit of an increase, but then leveling off, hopefully. All right, that leaves us, last but not least, with our updates. Orlando sales. Now, if you look at the Orlando sales, look at June. We saw a decrease. So in May, we saw an increase in sales. But in June, we actually saw a decrease in sales, which is what we just seen nationally. So we're seeing the same thing here locally in Orlando. What about the average sale price? Interestingly enough, even though the sales have gone down, number of sales, the price has gone up again. So every single month this year, look at the increase. It's been a slight increase from May to June, but nonetheless, we've seen an increase in the average sale price, even though we've seen a decrease in actual sales. Now, hopefully we're going to see a little bit leveling off, because if you see that increase, it went quite up, but then it hasn't been a huge increase. So we'll see what happens over the next few months. Stay tuned. Again, we have our summer buyer and seller guides. They're always available. They're free. They're PDF files. You can just contact us through our website at lawhonhometeam.com, and we can send you whatever it is you need. If you have any questions, you can call us at that above number, or again, go to lawhonhometeam.com. All right, guys, I look forward to seeing you next month with our next real estate market update.